Okay, welcome back everyone. This is the next episode of our mentorship. So this one I've already showed you about this one. Okay, I've already talked enough about this one on the previous episode, so you can check that out. Okay, this killing time. Okay, if I talk again about this we're gonna miss the rest. Okay, so this is the other one. Okay, so about this one you already know. So go watch previous video if you didn't. If you haven't, okay. So let's go to the next one. So let me use this one. This is very good, as you can see. This is okay, I can clearly use that button. So here I'm implying 5% right here. So as you can see, this is the low, and the market traded down. And there we go. The 5% is actually down there. It is a huge grid. So 5% is all about the classical black box. It's all about the classical black box. Okay, that's what I am showing here. So I'm trying to say that we didn't break the low. Technically, we took the low. It is lower price than this swing low. It is lower than the swing low, but we didn't break the 5%. Okay, the 5% is a red line. It's a red line. Okay, so anyways, that is the marker right there that we are seeing. Okay, so let's start. Do you see any black box here? Yes, where? Right here. 1, 2, and 3. This candle is rather wicks. It is full of wicks and huge blocks. So it's crazy. It's just crazy. So anyways, then what happened? We broke the 2.5% down there. 2.5%. What are we gonna do now? We sell. Okay, that's a sell. Stop loss up there as always. Stop loss only up there. Since I zoomed in, as you can see, seems like it is a huge stop loss, but when you zoom out, actually it is gonna be like this one. Okay, it will be like this one. Okay, when you zoom out. Okay, since I zoomed in a lot, so it's gonna cover the screen from top to bottom. So as you can see, that's a sale, bam, delivery. So what do? You measure your take profit. Okay, in this case TP1 will be down there, and then TP2 most likely around here. Then the rest is TP3 right here, as you can see. Okay, roughly it is about this. It is something like this one. So the one thing that I recommend you to never do is to stay away is if TP2 is very close. As you can see, just like this one, this is the low of the second candle, right? TP2 is right around there. Okay, it is near, which means I don't want to risk this much money to only get this much profits. As you can see, it's only this one. As you can see, this is my risk and this is my reward. Look at this shit. It is crazy. It's quite the opposite. We need this to be the opposite. Okay, the risk should be like this and the reward should be huge, but in this case it is a risk very huge. So what does that mean? We abandon this shit. We abandon this setup. It is gone. It has a huge wicks. It has a huge risk. If this wick was not here, I would have entered a sale, targeting TP2 down there and entering a sale up there. That's pretty much good. And of course, as you can see, it went to TP3 too. If that week, this week, the second candle's week was not there, and especially if these two candles weeks were not there, I would have placed my stop loss up there and my entry down there. Look at that. My risk could be much less. So as you can see, when you encounter these kinds of huge candles, you gotta abandon them and use them for directional purpose to determine your direction. Yeah, simple as that. Okay, simple as that. You just pass it. Okay, simple. Setup is everywhere. I'm not gonna linger around that setup which does not give me anything. Okay, which is very risky. I don't wanna do it. Okay, the setup forms every single day. Every single day. If you don't find it in Aussie yen, you will find it in Euro yen. If you don't find it in Euro yen, you will find it in dollar yen. If you don't find it in dollar yen, it will be on USRT. In USRT. If it is not in USRT, it will be on CNB 500. If it is not there, you will be finding it on gold. It is everywhere. It is everywhere. It is a fundamental market structure. You will have accumulations and distribution. Okay, accumulate, distribute, accumulate and distribute, accumulate, distribute. Simple as that. It's simple. It's just simple. So nothing is nothing complicated about this. It's simple. So anyways, let's jump to the next black box. Do you see anything here? Yes. Where? Right there. 1, 2. Huge candle and 3. Right around there. As soon as that market, that candle broke, right there is a 2.5%. Now I know I am in a buy program. Now the algorithm is gonna seek higher prices until TP2 and TP3, and if there is an inefficient black box before this, when you scroll to the left, if there is an inefficient black box, or an inefficient black box means a black box that didn't hit TP2, which essentially is like big blocks like this. Big blocks, those require a lot of pips to move in the either direction to hit their TP2. Okay, I already told you that your TP, your take profit, depends on the range of the black box. If the black box's height is very high or long, it's gonna be huge take profit. If your black box's height is, or the range is low, the TP will be very low too. It all depends on the range of the black box, the height of the black box. So that's why if there is any big block of black box previously that we missed, so the market is gonna seek higher prices because it has already delivered for this one, already delivered, for this black box already delivered on its way up. It is fulfilling every black box's inefficiency. Right there. It is fulfilling every black box's inefficiency when it is moving up or moving down. Okay, that's why you are seeing price not stopping after hitting TP2. They do not stop sometimes. They go up and up and up and up. It is just crazy. It's just crazy. There seems to be no stop at all. That's because there is an inefficient big black box that was not fulfilled. That was not the TP2. Its TP2 was not hit. So price is now trying to make the market efficient again by moving up or moving down to go to the downside. This black box TP2 will be down there based on the Fibonacci extension. So anyways, so it will be what is it? 1, 2 and 3, right? So we measure from the body to the breaking candle, that's the third candle. Now we know that we are in a buy program. Right there, the program changed from a sell, from this black box sell to this black box's buy, but not yet this black box's buy. Why? We didn't break the 2.5%. Where? Above there. Not yet. Now up there, now we know up there market still pushed up. Now 2.5% is triggered for this black box. But if TP2 is nailed down there, then there is no point in trading this black box when the market changes direction, because the number one rule, don't forget that I already told you to trade the recent black box, the new black box, not the previous, not the old ones. Okay, the old ones are dead. They are dead. They are only used for directional purpose, for take profit. Okay, take profit, and yeah, they will show us where the price might head. Okay, might be headed. So right there, we measure from the body, because we are concerned about this black box. Then your TP1 will be above there, TP2 will be most likely above there. For this price, going to TP2, TP3 was not nailed. Most likely TP3 is not nailed for this one. So then what happened? This price broke, right? After that, what happened? We made another black box, 1, 2, 3, I see. But we're not gonna enter a buy there. Why is that? The same thing that I told you earlier. Our risk is very, very high. It would be great. It would have been great if this week was not here. If this week was non-existent, our stop loss would be down there, up there also. And then our risk will be a little bit smaller, as you can see. Not down, not double our risk. So I'm not gonna enter a trade with this crazy candle. This is a crazy candle right here. How's the how's the pairs are like crazy, bro? It's just crazy. So this is another no. This is another no. We don't use this one, but we can use this for directional indicator to indicate our direction. We already broke the upside, which means I'm going to extend my Fibonacci to the upside. Okay, TP1. Oh my god. Okay, TP1, TP2, and TP3. So I'm expecting price to hit this TP2 eventually. So what does the market do? After hitting TP1, bam, market collapsed. Notice that never went down this low, because we have an unfinished business. This market is inefficient. It didn't hit TP2, so it has to hit it. So look what happened. I say, right, when you measure the swings from this swing high to swing rising, the wicks, including the wicks, you will see that half this huge swing is halfway is found around. This is halfway, and then below the halfway, what is it called? It is a discount area. What does that mean? It is a buying area. Why? Because it is very cheap. Every price that comes down there, after you know that it is in a buy program, every price that makes down there is a buy opportunity if TP2 is not hit. Since we didn't hit TP2, so right there I am interested in a buy. Using the third model, I buy this one. Okay, using the third model, I buy this one. But actually, it is not the third model. Why? Because the black box here and here. What happened? What exactly happened here? What exactly happened here? Nothing. Absolutely nothing happened here. For this black box, nothing happened. Why? Because it includes this high. This is the third candle's high. This low. Until price breaks above this boundary from this high to this low, nothing happens. This is actually the black box. Okay? The huge range rise there. We are trading this 1, 2, and the third one broke. We are gonna buy. When we buy that, we do not consider this as a breakout. It might be a breakout in the lower time frame. Okay, what the hell is happening here? I'm sorry. It might be a breakout in the lower time frames, but in the lower time frames, this one is a black box, and the third candle broke out. That is our narrative. That is our thinking. That is our scenario right here. Okay, so this is a black box break. That's a buy. Since it is the first candle high is above there, that's a buy here. We are using the lower time frames black box, not this time frames black box. This time frames, the 1 hour time frame black box is the whole thing, includes the third candle. I already told you it includes the 3 candles, 3 overlapping candles. 3 overlapping candles is the definition of the black box. Its basic definition is 3 overlapping candles in a row. Simple as that. Simple as that. Okay. So in this time frame, in the 1 hour time frame, the black box is the third candle to the first candle, the lowest low. Whichever candle is the lowest and whichever candle is the highest will be bounded by the black box. So nothing happened. This is epoch. It didn't break the 2.5% thing. Yeah, this is 2.5% is above there, I think. A little bit it went a little bit up, but didn't break it. Didn't quite break it. So the next one made sure that the 2.5% is really broken. So it shattered the ice up there. The ice is now gone. It is broken, which means we are in a bullish trend now. A bullish trend, as you can see. Buy. This whole thing is a buy. As you can see, we are in an uptrend. Okay, in an uptrend. So anyways, so what happened right here? That's a buy. By using the third model, I am using the third model because of this lower time frame black box. This is a lower time frame black. When you extend it further, this is where price mostly reacts. This is called the silver zone. This is a silver zone. We can buy right here when the price was trading here. Buy. And our stop loss still down there. So it is better to risk this much than to risk up there to down there. That is two totally different things, as you can see. Halfway, we minimized our risk by half. So as you can see, I am buying. I know already that we are in a buy program, right? So after the 2.5% have been broken, I know we are in a buy program. Let me zoom in for you. What the hell is this? Here we go. Now it is better. Let me use this. So right there, after that 2.5% was gone, I know I'm in a buy program. We have one, these 2 candles black box. This is a place we are interested in. The bodies. This is a lower time frame black box. actually including the high and actually including the low of this second candle as there down there. So now if the price is breaking the 2.5% the upside, I am in a buy mode, right? In a buy mode. Aiming what? TP2. Where is TP2? I determine by using the bodies of the third candle and the two cards, the previous two candles, whichever is lowest and whichever is highest. Okay, TP2 will be determined. Alright, after that, I know in a buy program, I am in a buy program, and the algorithm is in a buy program, and if it is in a buy program, we are moving up. If we are moving up, I will extend my Fibonacci upside and put my TP just like this one. And I want the price to gravitate to that price level, the upside, right? So I will determine if my risk is worth it, if the risk is less or if the risk is very high. So in this case, the risk is very, very high, as you can see from up there to down there. That's a lot of money at risk. So I'm not gonna enter a trade like this one. I will abandon it, or I will wait for that discount trade. So this area is the one that I am interested in. This is the lower time frame black box. This is where price will hit. If price didn't deliver to TP2 upside, if it fell short of TP2 and came down there, that's the best opportunity, bro. I'm not gonna waste any single time. That's the best opportunity. Why? Because risk wise, I am risking less. That's my entry, sniper entry. This is called the golden zone. Why? Between your stop loss and between the black box, the area is called the golden zone. The area where the black box is located, the bodies of the black box are located, is called the silver zone. That's where the price mostly reacts. That's 60% or 70% price returns hitting this line if TP2 is not hit. If TP2 is hit, and only if we have an inefficient previous black box that didn't hit TP2, we still come down there, support, and we will still move up, regardless of this black box hitting TP2 or not, because we are already in a buy mode. We are seeking higher prices, and we will be gravitating to TP2 at higher prices, not lower prices, because now the algorithm is in a buy mode. We are moving higher. Okay, so that's the best entry right there. That's the best entry. Okay, black box. What if I interrupt there? You can interrupt there too. That is the best entry. Why? Because most of our already told you 60% bounce off this silver zone, not the golden. The golden zone 30% will make it. 30% or less price retests will make it to the golden zone. But 60% to 70% will bounce off this black box, so you will miss the opportunity to enter. They will go out. They will go up without you. So it's best to interrupt them. And if you want to wait, you can wait and see if the price make it to the golden zone. If it breaks the downside, that is even less riskier for you. Okay, so you will enter down there. You can enter at the halfway of the wick. If you find a wick, halfway of a gap. If there is a gap means it's like this one. This kind of gap, like this one, halfway. So you can see this is a wick, right? This one is a wick, huge wick. It means you wanna put the halfway just like so, and as soon as it hits that halfway, you can enter it buy. Right? You got me? You got me? So what did the price do? Just right there, it hit it is halfway and bounced off. Isn't that crazy? It is crazy. So wicks and these kinds of gaps you can use halfway to trade the retests. Okay, beautiful, simple as that. Simple as that. So after that, what happened? It went right into your TP. Bam! TP is located up there, and your entry is down there, your stop loss still down there, intact. So this is roughly about 122 up there, and then up there 1 to 2.5 or something. So you can see that's a beautiful, and bam, nailed it. Then along the way we found another black box where exactly I'm showing everything, guys. I'm not hiding nothing. I don't hide nothing. Okay. Okay, let me check this. If we are still recording or not. I don't wanna talk to the wall where if no one is listening, then what's the point? I'm trying to pass a knowledge to you that served me well, so you don't struggle. So you don't have to struggle, right? So what happened here? We won. Okay, actually let me zoom in. Let me zoom in because I can see there is something wrong here. There is something wrong here. Okay, what do we have up there? Is that weak? Is this weak? I mean, this body. It has no body at all. It is a thin wire, as you can see it. Is that disc inside this box? If it is the case, then we have a black box. If it is outside of the box, then we don't have any black box. Okay, it's simple as that. It is simple as that. Is that box? Is that disc inside this box the second candle's box? I think yes, it is. If it was not parallel to the box or inside the second candle's box, then we don't have any black box. Why? Because I already told you that the first two candles they have to overlap at least to 50%. At least to 50%. At least to 50%. So in this case, we have a doji or a spinning top or whatever disc it is. This disc is inside this box, so we have a black box here. Simple as that. It's simple as that. It is. This. Then we trade it up. Then oh my goodness, we broke the 2.5%. Broke the 2.5%. But as I told you, the black box is which one? It includes the third candle and the rest of the previous two candles. Right? This is the black box, including these two. The high, including the wicks. Okay, this is a black box right here, what you are seeing. Then what happened? What happened? It poked a little bit, but didn't break the 2.5%. It is a little bit poke. Then really what happened is we broke the downside right there. Okay, we broke the downside. And then afterwards, just like the third model, a single fake out, what happened? We went up and broke to the upside. Then what do we consider now? We are not trading this. We are not entering a trade. Why? Because look, stop loss, entry. Observe the first entry is like this one. This is huge. We're not gonna risk this much. The second entry is down there, right? A sell or a stop loss up there. Huge risks. So that is not gonna happen. As you can see, huge risk. This is a huge risk. This is a huge risk. What we are interested is in the third model, the retests. How do we play that out? This is a black box from the third candle's wick to the first candle or the second candle's wick. It's a black box and we dump it. We're not gonna sell this. Why? Because this is too risky. From up there, stop loss to our entry, it's a long way, which means we're gonna lose a lot of money. As you can see, this thing came right back up. Then what do we do now? We determine the TP for this one, for this black box, using the body, not the wick. This is where everybody is mistaken. Everybody does it wrong here. Okay, so you use the bodies, not the wicks, on the two candles, whichever is lowest, whichever is highest, you connect it, and then determine the direction. We first broke the downside, right? Which means I'm gonna extend the downside. TP1, TP2, and then it is actually down there, because as you can see, this candle is very big, huge, which means the Fibonacci is gonna be down there, extended. TP2, TP3 will be down there, as you can see. Okay, so TP2, the price just fell short of. I am observing. I am not entering any trade. It is too risky for me, so I will not enter a trade. It is too risky. Okay, you catch my drift? So it came really close, not very close, but close, and then it bounced off and went back to the black box. Okay, the 1 hour black box. The lower time frame black box is these two, the two candles, one to the doji and this red candle right there. When you extend it, you will trade the third candle using those. But when the third model or something like that happens, you use the whole thing, the whole black box. Okay. Then what happened? We came right back to the range, to the black box, that's the accumulation area. And then we broke the upside. What does that mean? It means we are in a buy mode now. We are in a buy mode. We are in the third model. You have to consider the models, the first model, 2, the fourth model. You have to consider the model. You have to know if we are in a sell model, in a sell mode, or if you are in a buy mode. Simple as that. Two things. If we are in a buy mode, if we are in a sell mode. That's that. How do you know this is buy mode or sell mode? Determine your 2.5%. Determine your 2.5%. That's the red line. If that red line is crossed, the mode will change. The algorithm's direction will change. Believe it or not. So as you can see, we were in a sell mode. So we immediately got back in and we entered the buy mode up there. 2.5% is broken, right? What does that mean? It means now it is time to change the Fibonacci, extending from, it was extending to down there, right? So you reverse the direction and you extend it to up there. TP1, TP2, okay, and TP0 will be just below the sky. It is very long. It's very long TP, which means we're gonna expect this price to move higher, Then what happened? Then what do you do now? Just the same thing happened. The price retraced back without hitting TP2. What does that mean? It is a perfect opportunity for us. A perfect opportunity for us for a buy setup. Okay, what does happen? What happened here? We came down there, and then that is our low from this swing high using the wicks to the swing low. You determine the middle. The middle one is found here. Is the middle one, right? The price must trade below at a discount, and then this is the black box. This is called the silver zone. I'm sorry. This is the silver zone. I can't buy up there. Why? The stop loss is down there, and my entry up there. Look, that is my risk. Huge risk. So I'm gonna enter at the middle of the wicks. I told you that if there is a wick, a long wick, use that wick as the middle. Look at that. The middle is where? Down there. So you can see that's the middle. From up there to down there. Price went down. Touched it. Buy. Now it is a buy. That's my stop loss. And that's my buy. So my risk is this much. Little bit risk. It's beautiful. Targeting TP2. Where is TP2? Up there. TP2 is up there. So as you can see, the price drove past up, went up, bam, traded, bam, it went down, really came close to your stop loss, and then started moving up. Okay, let's see what happened if this thing, what the hell, if this thing can show us what happened. Oh, okay, we can see nothing. Saudi dollar, this is Aussie yen actually. Okay, we don't know what happened here. We're not gonna know what happened here. Oh my god. So this is 28th June. Okay, 27th June 6. So I want this price to move to the upside. I don't want it to break down. If it breaks down, it is gonna be the false model, just like this one. We broke this one, right? And then we went up and broke. This is went up and broke, as you can see. And then breaking down again, that is called the false model. And we don't want that to happen. The false model, we don't want that to happen. We want the third model to happen. What is that? The same thing. That is this one. We broke this one. This is a black one actually. Then we broke the downside. Then we broke the upside, right? Broke the upside. So, just like that one. Then we came down really low. And then we want this to go up. Based on the black box's hit, the range, TP2 would be above there. So above there like this. Above there. We want the price to pump. Like this. I'm telling you, most likely this price has moved up. I'm telling you. I am telling you, mark my word. This price has moved up, okay? Just, we will see this. This is at 27, June 6, right? That's 2024, so June 6 o'clock, 27. We will see this price action. I'll show you. You will see. This price has moved up, okay? To TP2 right here, I'm saying. So anyways, so this is exactly what happened. So we came down there, which means we came down as well, just like this. Really low, which means our stop loss down there, okay? And then we moved up, just like this. Okay, that's a pretty decent money, as you can see. If you bought that, look at that, that's a huge profit. That's a huge profit, no joke. That's a huge profit by itself. Even if you didn't reach that EP2, not yet, but that's a huge profit by itself. If you want to take shares or something, or if you want to get out of trade. But why would you get out of the trade if your target is upset, right? So we are gonna wait for something to happen, right? So anyways, this is the reality. This is the scenario that we wanted to play out. But since we trade the recent black boxes, if you are wondering about this one, we didn't break the 2.5%. This one is a low. Nope. Let me extend this for you. As you can see, this is a low. And bam. This is a grid from this up there. Oh my god. Up there to down there is a grid, right? So this is really low. This thing went really low. But this one is halfway, which means we have room. Our stop loss is down. It is really low. It's gonna touch the grid. But this one, it didn't even reach that grid, which means we didn't break nothing. We came really close, but we didn't break the 2.5%. So this is just a support, another support, another buy, another buy. Bam! I'm telling you, this is another buy. So I am having issues with this connection. I don't know if it is a battery or something, but it's just crazy. Now it has gone, even disappeared. I'll try to reboot it, but so anyways, that is the scenario. Okay, that is how you play the inefficient black boxes. You can use the recent black box also to trade the inefficient black box. This one, just like this one, and just like this one. Okay, you got me? How? You may ask. So after this, what happened? Another black box happened. What is that? A sale. I'm gonna sell this one. Why? Because it is a really not that much risk. It's not that much risk. It's not that much risk. Look at this. This is my stop loss, right? This is my entry. Look how much I am risking on this trade. But this one, look, very in contrast. It is not bad really. And the best thing is it broke, it opened down there, traded up. What does that mean? That is my sell. Up there is my sell opportunity. That's the second model. What does that mean? My stop loss is gonna be up there. Bam. This is my risk. My reward will be the downside projected. It is projected to the downside. Okay, you got it? Okay. Why is that? Maybe it is midnight. Yeah, at the midnight when the Asian session starts at the midnight. That is what is happening here. Okay. When a new trading session begins, the price just jumps and makes a gap like this one, and it is crazy. When you measure from this body, what the hell is going on? It's just crazy, bro. This is your body. You measure TP1 and TP2 is most likely down there, which means I'm gonna be dead sure that we're gonna come down there to TP2 and TP3 most likely down there and hit the bam, change the direction. I can tell you that. This is the halfway rate of the Fibonacci, that's a sell. Why? We have already shown that we are in a sell mode, and TP2 is not hit. That's a golden opportunity, and our risk is less. Why? We are selling there. We are selling at the inside the black box. That is the silver zone. It is not the golden zone. The golden zone is between your stop loss and the black box. This area. It is literally no money at risk at all. if the price comes up back up there, no money at risk at all. Look at that shit. It's like this. Just worry about the spread. We don't want the spread to get you out of the trade, but will not risk too much money, as you can see. If the price really comes back up to the golden zone, but I already told you that mostly the price returns at the silver zone, because that is where the black box is really found. That is where the algorithm refers to. That's where it refers to. I don't care if you call it an order block or some weird ass name. I don't care. This is a black box, and it is different than the order block, an order block, or whatever you call it. It is different. It is very, very different. Consequence, that's a sell. Bam. Targeting TP2. Then take partial 30% or 40%, whatever you like. Then wait for TP3. After that, trail your stop to break even. Where is your break even? Right up there, actually, because we are trading a retest. Retest, the second model, they are amazing, and the third model, the retest, they are amazing, bro. The risks are like this, the reward is like this, bro. It's crazy. So this would have been a beautiful setup right there. Okay, beautiful setup, but we might be asleep when this happened. So if something like this happens, I don't know, in the future I'm not gonna miss it. Okay, so you already know the source, you already know the secrets, so I already handed you what to do. So next, what happened? Next, holy grail right there. Bam, bam, bam. What is that? A buy. Stop loss down there. Wait, this is a risk. This is a risk. This is a risk. And then I told you that you can take partials for this breaking candle using the previous two candles. And as you can see, the wicks, if the price has no body, or if the price has nobody at all, I mean, if it is a doji, like a doji, sorry guys, so if it is a doji, then I told you to use the wicks, right? So look what happened. So wicks, when you use the wicks, your TP2 is gonna be, I told you to target TP3, right? Target TP3 from up there, equal highs, then equal lows. TP3 is most likely up there. I can tell you that TP3 is up there. When you measure this, TP3, boom, to the low. This is the middle of the Fibonacci. TP1, TP2, then TP3. TP3 really close. TP3 is nailed. You can measure it yourself. The date is 27 June 6 o'clock 2024. That's rising. As you can see. TP3 nailed. Already told you at TP3 you can trade your stop up to your entry. Then the market came back and got you out of the trade. You took partials at TP2. 30%. At TP3 another 30%, that's 60% off. And the other contingency plan is to trail your stop to at break even, so you don't pay anything except the commissions, the trade commissions. I don't know, $1, $2, sorry, $5, I don't know. No one cares. If you are making hundreds, thousands of dollars, no one cares about $1. So I riser trade your stop option. Okay. That's exactly riser. I am talking about this one. This is a breaking candle. Okay, for the breaking candle. Okay. Then in the normal way, after this candle has formed, that's a buy up there, right? That is a buy up there. What you gonna do now? You measure from the body. After this thing has traded, finished, closed trading, finished trading, measure from there. This is the middle of the Fibonacci. Yeah, you expand the Fibonacci upside, right? So what happened here? TP1 and TP2. Most likely TP2 is upside. And TP3 is upside, right? So after TP2, look what happened. This is a rough extension, Fibonacci extension based on my knowledge, okay, based on my expertise. Okay, I know that it is gonna be up there, TP2, roughly. It might be up there, it might be down there, but it is around there, TP2 is. So, and I already know that price return after hitting TP2. Most price retrace after hitting TP2. That's exactly what happened. So after you bought this shit right there down there, bam, you took partial 30% or 40% off. Then you don't touch nothing. You don't touch anything. Okay. Then what happened? The market reversed direction, retraced back down. And then we have an unhit or inefficient black box down there, this one. Then we measure the upside. Okay. Why? Because we broke the upside. Right. So what does that mean? It means if I enter a buy here, I'm gonna wait until this TP is hit. I already took partials at here at TP2 30%. I'm gonna wait for this one's inefficient black box to be delivered upside. So I'm waiting. Price just came down there. I'm not gonna buy, I'm not gonna sell. Why? No black box. There is no black box. Then is there something changed too? What happened right? A sell. Stop loss up there. That's a sell. Targeting. After the price after the third candle has finished trading and closed, that's it. You trail. You extend. TP1 exactly right there. TP2 is most likely down there. Okay, it is bigger. So as you can see, TP2 is down there. So you take partials, the same thing as just like you did down there. Okay, same thing. Then what do you do? What do you do? You wait. Took partials down there. You wait, and the market just came right near your stop loss. Then what did it do? It dumped. Since TP2 was not hit down there and the price ran, what does that mean? It means I'm gonna sell, bro. Look the black box. This is the 2 candles black box. I'm not gonna use the whole black box. Why? Because I'm interested in the 2 candles black box. I'm trying to be specific. Sniper. So this is called the silver zone. as you already know. This is a golden zone between your black box and your stop loss. Look what the price did. It went to the golden zone. What does that mean? Your entry up there, your stop loss up there. Look, the risk to reward. That is your risk, and the reward is down there. That is your TP2. Look at the reward. Look at the freaking reward, bro. Look at the shit. It seems like 1 to 15, 1 to 16, 1 to, I don't know. Yeah, something like that. 1 to 18, something like that. It's just insane. Insane risk to reward. That is crazy, bro. Out of this world. But in an ideal world, you never, in the real world, you never get that much. So you'd, without patience, you would enter it right down there at the golden zone because you don't want to miss the move, right? You know that TP2 is not hit down there, right? Based on this black box, I'm not talking about this. This is already done, delivered. TP2 is done, but this is not done right there, which means our target is up there based on this one. But based on this one, our target is down there. Why? Because TP2 is found there. Why? We are in a sale program, which means I'm targeting down there. And the other thing is we will not breach any red line down there by coming down there. Why? Because it is right there, found right there. That is where everybody plays the football. That is where stop hunt soccer. That is where a lot of war. That's a battle area. That's a battle area. Okay, that is where we are far away. Our stop loss is far away from that. We know that is a stop hunt area. That's a battle area. So we want to get as far as possible. That's why our 2.5% is perfectly located at a safe place. And we already know that the red line is not gonna be touched. Why? Because we have an inefficient black box here telling us that we are moving up by this run right there. Okay, everything that comes down there at a discount, a perfect price for a buy. But we're not gonna buy that one unless any black box forms. We cannot trust this one. We can't. So anyways, so that's a sale. That's another sale right there. So if you wanna wait for another push because it is a big block, a big green candle, that means it might have went fast to the upside, which means I'm gonna say right there at the golden zone. That's a golden zone. Look at that sale. Bam. So most likely my entry down up there, stop loss up there. So that's my risk and my reward is down there. That's a beautiful trade by itself. It's beautiful. It's beautiful. And I'll take my partial at TP2. I don't know, 40% or something. 40% or something. After this, because this is a huge move by itself, you might think to take the whole of your money out. Because this is a huge dump and a huge risk to reward, as you can see. You risk the less but a huge money in return. So you might get half of the position out and trade your stop to your entry. Why? Because you can do that. Why? Because as you can see, the entry is very, very far away from where the price is located. You can safely press your stop loss from up there to down there. Move it from up there to down there. Number one, you have a bigger black box telling you are moving up. Number two, we have a price is down there. We have price down there, and there is no reason for the price to come back up again up there and still continue down there. There is no reason. Only halfway is enough for it. If it hits halfway, that is enough for it to break down. So it is safe to place your stop loss at the break even up there. And this place is already what? A protective area. This is like a protective area, a wall. So every price which comes up there will be faced with a huge resistance, which means we will be coming down there. So it is safe to put your stop loss at break even once the price where you enter that first place. So you already took your half partials at 50% at TP2, so no worries. There is no worry. So that's a beautiful trade right there. Then after that, what happened? After that, we found another black box. We found another black box. Where did we find another black box? There, 1, 2, and 3. We break anything? No. What about now? Yes. What does that mean? That's a sale. That's a sale. What does the market do? It immediately retraced and hit your stop loss. From your entry, it went up and hit your stop loss. But in the way, it made another black box. 1, 2, 3. Then the fourth. So now I'm gonna consider this 3. Not this doji. This doji is nothing. Because I'm gonna consider candles which are similar in shape. Which are they? Okay, let me zoom in here. Oh, come on, man. Let me zoom in here. Similar in shape are these two. Not this one. Not this one. Okay. And this one. Similar in shape means this one. It traded above this candle's high. And this is the same thing above 2. This traded at 50%. We want that. We will take 23.6% as a minimum. 50% is good. We traded no break. We traded down, yes, break. Down there, that's a breaking structure, which means we are selling. No sell program. But the program said, no way, I'm not gonna do that. I'm gonna move up. So went up. That is simply a third model. That might be simply a third model. But when we measure from the body to the body, remember TP2 is our target. When you extend the downside, what do you do? What do you get? TP1, so TP2 is most likely here. Okay, maybe TP2 is triggered, that's why. So the first job of our entry should be determining where TP2 is and determine if there is a huge wick or not. So TP2 is down there. So actually TP2 was hit, which means this setup is no longer here, no longer valid. It's done. It is done. So I'm gonna focus on the new one. So which means if I enter down there and TP2 is located down there to, what is the point of entering this trade? What is the point? There is no point. which means I have found something that can protect me from losing money. What is that? Determining if TP2 and your stop losses range are in the same place. If your TP2 and your entry are in the same area, there is no point in entering. Why? Because the price all it seeks is TP2. If TP2 is hit, there is no reason for the price to stay around. It is gonna hunt the other black boxes. TP2. This is what it is doing. It's what it is doing, nothing more. Look, this black boxes, TP2 is done. Even TP3, TP2 and TP3 is done. What does the price do? It went up to the other direction. Why? Because we have something here that didn't quite hit TP2. I'm sorry, this one. It is this one. So it's trying to achieve, to make it efficient, to make the market efficient for this black box right there. That is a genius idea. A genius idea to save money. To save money. If TP2 and your entry are in the same area, I'm not gonna enter a trade. Period. Period. Finished. It's period. So, in a sense, that trade is gone. There is no trade there. But I'm gonna observe. Nothing will kill me if I observe. I'll not be dead. I'll learn something. I'll not hurt myself. I'm not jumping off of a 10-story high building, bro. I'm just watching price action. Just watching. You don't get hurt by just watching a price action. So, as you can see, TP2 is up there and your entry is also down there. Why? Because this is the low of the second candle and it has to break the 2.5%. Right? There is no trade here. Thank you very much. There is no trade here. I'm gonna wait for the next one. That's the next one formed. What do you do now? A buy. Why? Because when you measure from the body to the low, your TP2 is actually located up. So if I enter down there, that's a decent amount. That's a decent. That's a decent amount. And the amazing thing is, it is not even the third candle that did this. I mean, it is not the whole, it is not the black box, the whole black box. The whole black box actually is this third candle, including the third candle. And we actually broke the downside. Right? So, I'm gonna enter a buy. So, in order to take profit for the third candle, if the third candle is breaking, you're gonna use the previous two candles body. If they are full bodied, almost full bodied. If they are something like this doji, use a wick. Is this complex? Is this a complex thing? I will put every rule, I will put everything that you have to do step by step in or a Google Doc or something, PowerPoint, and I'll share it with you, okay? Don't worry about it. But it is better to take notes for yourself while listening to these videos. Take notes. Take what I am saying. Write what I am saying. Not everything. Key points. Key points. When I repeat something, like it is you know that's important. That's very important. like the one I told you before, like when TP2 end, your entry are at the same place, at the same price level, or near the same price area, then do not trade that, do not enter. This sentence should be in your notebook. It should be in your notebook somewhere, and you wanna look at it every day until you internalize it. Okay? It's no joke. It is no joke. You might say, "Oh man, this is a black box." So no, it broke. Oh my god, it broke. It broke. It broke. I'm gonna say, you didn't listen to what I'm saying. You cannot sell because of this. I already told you that. Okay. So what is that? That's a buy. Targeting this body because it's a full-bodied candle. The two previous candles are two full-bodied, almost full-bodied. They are not a doji. They are not a spinning top. They are not something like this across. No, they are full-bodied, almost full-bodied. Which means my Fibonacci is gonna rest from the highest of the body to the lowest of the body of the two previous candles. Now I'm gonna determine my TP2. Where is TP1? I zero. Where is TP2? Up zero. Where is TP3? Up zero. This is how I determine my TP for this third candle. For the if the third candle is breaking. If you call the price after the third candle has formed and everything has done and dusted, your black box is this one. From the wick to the lowest wick. You're gonna determine the Fibonacci by extending this, and you're gonna extend the downside. Why? Because we broke the downside as you can see with this big candle. Okay? It doesn't mean I'm gonna enter a sell using this. Why? As you can see my entry down there. Look, the risk. Boom. That is demolishing. That is demolishing. I can't risk this much money just because the setup happens, the setup formed. No, I'm not gonna throw money everywhere. It's not gonna happen. I have rules and I follow them. So you're ready to partials at TP2, 30% off. At TP3, another 30% off. Then now after TP3, trade your stop to break even. I don't care. After TP3, trade your stop. Then what happened? This is a rotation area. Even if the black box is technically it contains up there to down there, we are interested in this area. Look what the freaking candle did right there, the retest. Did it went up there? Because it's a black box? No, it didn't. It stopped right there and changed gears. Look at that, traded down. This is a sensitive area. Okay. So based on this, we expect this price to be, we expect this run to be what? A fake out, which means a single fake out, which means a third model, bam, boom. Just like right there, bam, boom, we broke, then bam. 2 TP to rise there. Why? Because these candles, this black box TP2 is found up there. Okay. So I'm gonna determine this and determine the TP2 too. Alright? Not only for this one. TP1 is found around there. And TP2 is never hit. Why? Because look, the candles are very huge, which means there is a high probability that we're gonna hit TP2. I don't care if it's a downside or if it is to the upside. I don't care. If it breaks to the upside, then this is gonna be the third model. We broke, then if we move up, and when we come down there, that is what I'm gonna be interested in. And my stop loss will be down there. When I come down there, after breaking, after showing that we are in a buy mode, after hitting breaking the red line, the 2.5%, I'm gonna be interested in buying down there. Why? Because TP2 is waiting for me up there. It is never hit. That's a good news for me. That's a good news. What do I do now? I buy the price. That's what I drew right there. Just like I said right there. So my stop loss down there and my entry up there. Look at the risk and look at the profits, baby. Look at the crazy profit. It is just nuts. You can't. It is like 1 to 6 or something. 1 to 7. 1 to 7 or something. Isn't this amazing? I do this if there is no black box formed here. Right here, when the price moves up like this, if there is no black box, if it goes straight up and straight down and straight down, that is where I'm gonna use this as my entry technique. And I'm not gonna risk much. I'm gonna wait for this at least to come to halfway of this week, or at least come back up there. Right there. That is not too much risk. It's a little bit. Considering the reward, as you can see, the reward is gonna be up there if you measure it correctly. Okay, that's beautiful, isn't it? So we learned a lot today. I hope you have got some gems from these videos, and I will definitely put some PDF format or on a PDF format or in something else too of the rules that you should follow, in case you didn't write it yourself what I'm saying here. But I recommend you to write it, okay? I recommend you to go through every video that I put inside that mentorship. Go through from episode 1 to wherever it ends, right? Wherever it ends. It is for your own sake. That's why you paid for this, right? So you wanted to find a way to make money trading, right? So this is it. We don't want any other bullshit. I'm telling you, this is it. You made the right decision, and I'm gonna prove it back to you. I'm gonna prove it. Okay. So anyways, I'll catch you in the next episode of this mentorship. So thank you for watching. So I'll see you in the next one.